Are pharmaceutical stocks a huge buy now? Warren Buffett, one of the greatest value investors of all time, just bought 4 pharma stocks over the past quarter. He bought into companies Avi, Merck, Pfizer, and other big pharmaceutical stocks over the past few weeks. So in this video today, we're going to take a look at Warren Buffett's portfolio, the new buys and sell he's made over the past few weeks and months, and discuss the 4 pharmaceutical stocks he added to his portfolio. Of course, with the pandemic, with the election, there's a lot of volatility around the pharmaceutical sector in the market right now. But when Warren Buffett, one of the greatest value investors to ever live, jumps in on that sector of the market and dives into those dividend-paying stocks, we have to take notice, and we're going to go over each of the 4 companies he bought within that sector of the market, take a look at their current financial position, and go over their current estimated fair value and see how they are trading relative to what Morningstar believes the fair price for the share should be. So if you're new here, everyone, I am the Gen Z investor. Every single day we talk about the stock market. We go over different stocks you can buy and sell in your own personal portfolio. And I am a dividend growth investor. My current portfolio sits at over $73,000. And in this video today, we're going to focus on Warren Buffett and discuss his new buys and sells and go over the 4 companies he just added to his portfolio over the most recent quarter. So please hit that like button and subscribe. So from Berkshire's latest report, they show that they are holding a position worth more than $1.8 billion in each of AbbVie, Bristol Myers, and Merck, as well as $136 million of Pfizer stock. So essentially what we're kind of thinking here is that Buffett and his team believe that the big pharmaceutical companies are going to play a major role in getting the economy back up and running. Of course, the global pandemic we're getting through isn't going to be solved truthfully without a vaccine, and he believes either one or a combination of many of these big pharma stocks are going to be major players in getting the economy back up and running. And of course, over the past few weeks, we've gotten a ton of reports saying how the Pfizer vaccine, the Moderna vaccine, and other vaccine combinations from various pharmaceutical companies can really help get the economy back and running over the next 12 to 24 months. And even today, we got great news that Pfizer has ended their trial with a 95% efficiency rate for their vaccine, which is absolutely incredible. Originally, health officials were only expecting around a 50 to 75% efficiency rate, so this 95 is an absolute amazing feat to see, and I'm sure that's one of the reasons why Buffett believes this is a sector of the market worth the investment right now. And he diversified across 4 of the top names within that sector, and each of those 4 companies do pay out a dividend. If we take a look at Berkshire Hathaway right now, shares are only up 6% this year. They got hit hard in the month of March. Of course, Warren Buffett owns a lot of value stocks that kind of got really hit hard, and a lot of his businesses were kind of forced to shut down. But as of late, you can see a slow, steady recovery, and over the past few weeks, the stock has kind of picked up and surged. Of course, we have seen that transition away from the big tech or more into value stocks. We saw that kind of rotation in the market happen around 10 days ago, and Buffett's portfolio, mainly held up of value stocks, is kind of seeing that nice recovery. Of course, Warren Buffett's largest portfolio holding is an Apple stock who continues to push up even higher than ever. So if we take a look at what else he sold over the past quarter, he sold out of JP Morgan, slashing his stake in the company by 95%. He also sold out of Wells Fargo, and he exited his Costco position worth more than $1.3 billion. Buffett also cut his position in Barrick Gold by over 40%, and this was actually a short-term play for Buffett. Usually he's a long-term dividend investor. He doesn't usually plan on selling a company over a short-term span, but he actually bought into Barrick Gold not too long ago in the second quarter, but has once now slashed his position by more than 40%. So interesting to see why Buffett did that, but you can see here he made around $17.6 billion of purchases and around $12.8 billion worth of stock sales, so a net purchase over the last quarter of around $4.8 billion. He has been putting a sizable amount of money into companies like Bank of America, so although he slashed his JP Morgan position, he doesn't actually give up on the financial sector as a whole. He was just transitioning his assets into, the bank he sees outperforming over the longer term, and he chose Bank of America. So we jump back into the pharma stocks. We're going to go over each of them individually to take a look at their current financial position and take a look at the current estimated fair value and the dividend yield and the dividend growth of each of those companies. As a dividend growth investor myself, I like holding strong companies that continue to grow that dividend payment each and every year. And I actually own 2 of the companies on Buffett's buy list, which are AbbVie and Merck. And I actually bought Merck over my latest video where I went over my most recent buys. I bought them about 2 weeks ago and started the position in that company. Pfizer is the first big pharma stock we're going to go over today. This is probably the most popular of the four because they just announced their vaccine is 95% effective. This huge efficiency rate is absolutely incredible, and it's going to help save a lot of people's lives across North America and throughout the entire world. And hopefully they can get this distributed across the world throughout 2021. So Pfizer, ticker PFE, currently trades at around $36 per share. They are down over 3% on the 12-month chart and have seen a lot of ups and downs and a lot of volatility. So they have a market cap around $200 billion, and the company trades slightly below their 52-week high of over $39 per share. The current dividend yield sits at 4.22%, and this is a company that's been around for a long period of time. This is not some young biotech firm where this is their first time building a vaccine. They have strong history, they have very strong research and development, and this is a brand with a $200 billion market cap. So this is a real company that can actually get this done, and I think this 95% efficiency rate can really be a game changer for the economy. So if we take a look at a Morningstar report, they're currently ranked with a fair value of around $37.50 per share, so the shares right now are trading close to the estimated fair value. So Warren Buffett is known for saying he'd rather buy an excellent company at a fair price than a fair company at an excellent price. So getting into Pfizer anywhere around this $36, $37 price point at their relative fair value estimated by Morningstar might be a nice addition to a portfolio, especially because Pfizer yields 4.22%, which is an absolutely very high yield compared to the market we live in today, with around 52% payout ratio, so there's a lot of room to reinvest back into the business and to grow that dividend payment moving forward, and they've done a very nice job of growing the dividend at a rate average of 6.7% over the past 5 years. So the dividend's been growing at a nice rate, tied along with a nice high starting yield. This may be a nice dividend growth portfolio stock you're going to want to take a look at. Of course, we have the news with the new vaccine, so hopefully if this can actually be proven to be 95 effective and it can actually be globally distributed, I think Pfizer is going to have a lot of upside potential moving forward. If we move over to the second stock on this list today, it is Avi. So I own this company within my personal portfolio. I bought in around that $89 mark, so the company currently trades at around $99 per share. Ticker ABBV is up around 12% on the last chart, and you can see here they've seen a recent surge as of late. So this is still a company in the pharmaceutical sector. They have a market cap of $175 billion and have a massive 5.24% dividend yield. Very low forward PE of only 9.47 on this company. If we take a look, their estimated fair value for the company is around $99 to $100 per share. So once again, the current share price is being traded at the fair value. So of course, this is not a list of videos where I'm going over some companies that are really undervalued, trading 10, 20, 30% below the estimated fair value from Morningstar. These are companies right now where we're just honestly going through them, and you can see the market has them priced relative to what Morningstar and other analysts believe to be a fair value to pay for those shares. So this is a pharmaceutical company with a 5.24% dividend yield. Once again, a very sustainable payout ratio of only 50% of their earnings and a massive 5-year dividend growth rate of over 20%. This is huge numbers right here from this type of company. So Warren Buffett piled in over $1.8 billion into Avi Stock. In comparison, Buffett has over $130 billion worth of cash on his balance sheet, so he still has a ton of money left over to do whatever he really wants. But he put over $1.8 billion into Avi with a current yield of over 5.2%, a very sustainable payout ratio of 50%, and a massive 5-year dividend growth rate average of over 20% per year. That dividend, although it's already high getting started, is growing at a massive rate. Moving on, the third stock, it is ticker MRK, and this is another company that I own within my personal portfolio, and I just bought in recently. Ticker MRK currently trades at around $81 per share, and they are down 4% on the 12-month chart. A company, once again, with a $206 billion market cap and trading towards the middle of the 52-week range. They have a current dividend yield at 3.19%, and the estimated fair value for this company sits at over $89. So this company is actually being traded around an 8% discount right now. So this is the first one where if you were to buy in today, you are getting in at a pretty good deal, close to 8 to 9% undervalued from the estimated point where the shares should be. If we take a look, I bought into this company as well because they currently yield over 3%. I wanted access to the healthcare and pharmaceutical sector more in my portfolio. I want to diversify away from the 2 core holdings I have. And you can see they only pay out 43% of their earnings. Once again, another very low sustainable payout ratio with a nice average 3% starting yield and 5% annual dividend growth rate. Very comfortable holding this stock, and surely so is Buffett because he just started a new position. If we take a look at the final pharmaceutical company he bought, ticker BMY, currently trades at $63 per share, up over 9.7% on the 12-month chart with a market cap of $145 billion. Take a look, their estimated fair value for the company is at $67 per share, so they are trading relative to their fair value, but slightly under it if you want to go exact, $2 to $3 below their estimated fair value per share. If you take a look right now, the dividend yield at 2.8%, a very extremely low payout ratio of only 28% of their earnings, so their dividend is very sustainable. They can reinvest back into the business and continue to grow that payment. And although their dividend growth rate is on the lower side at only 2.5%, at least your dividend is matching or slightly outpacing inflation each and every year, so you aren't losing money to the silent killer of inflation. So those are the 4 different companies Buffett just bought. Very interesting quarter for the company. He did around $4.8 billion of net purchases, sold a small little sliver of his Apple position, sold out of Costco and JP Morgan and Wells Fargo, and he also sold out of Barrick Gold, his new short-term gold play that we really thought was going to be a long-term hold for the company. But I guess as Warren Buffett sees the vaccine potential, he sees people aren't going to be as interested in gold moving forward, and the company might suffer. So he took some profits because the Barrick Gold has gone up since he bought and put out a sell order. He also added the 4 new pharmaceutical companies to his portfolio. We just went over each and every one and discussed some potential for them moving forward. So if you're new here, I'm the Gen Z Investor. Please hit that like button, subscribe. We post every single day about the stock market. See you in tomorrow's video.